Welcome to Tech Disruptions, deep dives into the technologies reshaping industries, from AI to quantum to biotech. Let's get into it. $2 billion. That's the staggering figure the U.S. Department of Commerce has earmarked for quantum computing. But this isn't just another government grant program. This is Uncle Sam stepping into the venture capitalist role, making strategic bets on private companies.
Exactly. It's not just about funding research. It's about actively shaping an industry, building supply chains, and, critically, trying to catalyze further private investment. The government is essentially acting as a lead investor in a Series A round for an entire sector.
So they're not just throwing money at the problem, they're trying to de-risk quantum for the private sector, hoping to spur a much larger wave of investment. Is that the aha woman here?
That's precisely it. The shift from traditional grant-making to this strategic venture approach signals a profound change in how the government views its role in emerging technologies. They're looking for a return, not just scientific papers.
A return, and presumably a competitive edge. It's hard to ignore the accelerate U.S. leadership language in the announcement. What's driving this urgency to become a quantum VC right now?
The underlying driver is geopolitical and economic competition. This $2 billion isn't just some standalone initiative. It's nested within the broader CHIPS and Science Act. That act, as we know, was designed to address vulnerabilities in critical technology supply chains and maintain U.S. competitiveness against rivals, primarily China. Quantum computing is seen as a key battleground for future technological dominance, much like semiconductors are today.
So it's not just about breakthroughs in a lab, but about national security and economic power. The idea being that if another nation achieves quantum supremacy first, it could have significant implications for encryption, defense, and even material science.
Precisely. Think about the potential applications: breaking current cryptographic standards, developing new drugs and materials much faster, optimizing complex logistics problems that are intractable for even the most powerful classical supercomputers. If a rival nation gains a significant lead in these areas, it could confer enormous strategic advantages. The government is viewing this as a preemptive strike, a way to ensure the U.S. isn't left behind.
And the CHIPS Act isn't just about microchips then. It's really about a broader strategy for foundational technologies, with quantum squarely in its sights.
Absolutely. While the semiconductor portion often grabs the headlines, the CHIPS and Science Act also explicitly targets AI, quantum information science, and biotechnology. These are the three pillars the government has identified as critical for future innovation and national security. The quantum investment is a direct manifestation of that broader strategy. It's an acknowledgement that economic security and national security are inextricably linked through technological leadership.
So the government has identified this critical area, decided it needs to act like a VC, and has $2 billion to deploy. Who are the lucky recipients of these letters of intent? And what does that tell us about their strategy?
The Department of Commerce announced letters of intent with 9 companies. This isn't final funding yet, but it signals serious intent. The companies include established players and some more nascent ones in the quantum space, such as IBM, IonQ, Rigetti, D-Wave, some of whom are publicly traded, alongside private entities like Atom Computing, Cold Quanta, PsiQuantum, Quantunium, and QCI.
That's a pretty diverse group. Does it mean the government is hedging its bets across different quantum approaches, or are they picking specific winners?
It's a bit of both, but with a leaning towards hedging. Quantum computing isn't a single technology. It's a field with multiple competing hardware architectures. You have companies pursuing superconducting qubits like IBM and Rigetti. Others are focused on trapped ions like IonQ and Quantunium. Then there are neutral atom approaches, photonic systems, and even quantum annealing. By funding a range of these, the government acknowledges that the ultimate winner isn't clear yet. They're investing in a portfolio, much like a diversified VC fund would.
So they're not putting all their eggs in one quantum basket. But even with the diversified portfolio, these are still specific companies. How much scrutiny is there around why these particular 9 were chosen? Is there a risk of picking winners and losers in a field that's still so nascent?
That's a critical question. The selection process would have involved evaluating their technological maturity, their capacity to scale, their proposed projects, and their alignment with the national strategic goals. However, the risk of picking winners and losers is inherent in any targeted industrial policy. The challenge is ensuring that this investment genuinely accelerates the field as a whole, rather than just entrenching a few favored players. The concern is that if a breakthrough emerges from a company not on this list or from a different approach, this initial allocation of capital might inadvertently stifle that innovation.
It's a delicate balance. On one hand, you want to provide significant capital to accelerate development. On the other, you don't want to prematurely consolidate the market or miss out on truly disruptive approaches. What are these companies actually doing with the money? Is it just R&D or something more?
It's definitely more than just basic R&D grants. The funding is intended for things like building and expanding quantum computing and manufacturing facilities in the US. It's about developing new hardware, designing and fabricating advanced quantum components, and scaling up production. The goal is to build out a robust domestic supply chain, not just for the quantum processors themselves, but for all the enabling technologies required to build and operate them. This includes cryogenics, specialized lasers, control electronics, and advanced materials.
So it's about infrastructure as much as it is about the core quantum processor, like building the factories and the ecosystem around the chips, not just the chips themselves.
Precisely. It's an investment in the entire quantum stack and its supporting industrial base. The idea is to move quantum technology out of pure lab environments and into more industrialized processes to allow for greater scale and reliability. It's about bridging what's often called the valley of death, that difficult gap between fundamental scientific discovery and commercial viability. Government funding here is meant to provide the capital infusion that private markets might be hesitant to supply at this early, high-risk stage.
That valley of death concept is really important. Private VCs might shy away from the long timelines and uncertain returns of quantum, but if the government steps in, does it truly de-risk it? Or does it create a kind of moral hazard where companies become dependent on federal funding rather than proving market viability?
That's the flip side of the Uncle Sam as VC coin. There's a risk that companies, having secured significant government funding, might reduce their urgency to attract private investment or achieve true market traction. The explicit goal of the program is to catalyze private investment, not replace it. So a key metric for success will be whether this $2 billion actually unlocks much larger sums of private capital, or if it merely becomes a lifeline for companies that struggle to find commercial customers.
So if one considers metrics for success, it's not just about producing a certain number of qubits or achieving a certain level of quantum volume. It's about private follow-on investment and ultimately commercialization.
Absolutely. The success of this initiative won't be measured solely by scientific publications or even by new quantum devices. It will be measured by the emergence of a self-sustaining U.S. quantum industry with jobs, secure supply chains, and, crucially, viable commercial products and services that deliver real-world value. Are these companies developing applications that solve actual problems for businesses and governments? Are they attracting non-dilutive commercial revenue? That will be the ultimate test. If the companies remain purely reliant on government contracts, then the VC model hasn't truly worked.
This brings the discussion back to the inherent skepticism around quantum computing itself. There has been talk for years about its potential, but practical, commercially viable applications are still largely theoretical or niche. Is $2 billion a premature bet on a technology that might not be ready for prime time? Or is this the kind of investment that forces it into prime time?
It's a calculated gamble. The government is betting that with this strategic infusion of capital, the U.S. can accelerate the timeline for quantum's practical applications. They're trying to pull the future forward. However, the fundamental scientific and engineering challenges are still immense. Many of the touted benefits are still years, if not decades away from widespread deployment. So it's a high-stakes play. If the underlying technology doesn't mature as quickly as hoped, or if unforeseen scientific roadblocks emerge, then this $2 billion could end up generating more hype than tangible impact.
And the track record for government trying to accelerate entirely new, highly speculative technologies isn't always perfect. There have been projects that fizzle out or become money pits. What lessons, if any, could be drawn from past endeavors?
That's a crucial historical lens. The government has a mixed record. On one hand, programs like ARPANET laid the foundation for the internet. On the other, there are numerous examples of industrial policy that didn't pan out, or where government funds were misallocated. The key differentiator here is the explicit attempt to act like a venture capitalist, which implies a focus on market creation and commercialization, not just pure research. The challenge will be for the Department of Commerce to maintain that VC-like discipline, rigorous evaluation, and a willingness to adapt or even cut funding if specific bets aren't paying off, something traditional government agencies often struggle with.
So it's not just about writing big checks, but about cultivating a genuine market, and that requires a very different approach from what a federal agency usually does.
Exactly. It requires a level of agility, risk tolerance, and market insight that is often more characteristic of the private sector. The government is trying to learn from the VC playbook, but it's an open question how effectively it can execute that strategy. It's easier to allocate funds than it is to effectively steward them towards true innovation and market success in such a complex, rapidly evolving field.
This entire endeavor forces a reconsideration of the role of government in fostering innovation. Innovation is often thought of as a purely private sector, market-driven phenomenon, but here the government is stepping in as a direct, strategic player.
It highlights the recognition that for technologies deemed critical for national interest, the market alone may not move fast enough or invest enough at the early high-risk stages. This intervention is an attempt to bridge that gap and shape the future technological landscape.
And the future of quantum computing itself remains highly uncertain. This $2 billion bet is a strong signal of intent, but it doesn't guarantee a payoff.
It's an affirmation that quantum is considered too important to leave entirely to chance or the whims of the private market, but the outcome is far from determined.
So to synthesize the points discussed today, first, the US government is fundamentally shifting its approach to fostering critical emerging technologies, acting less like a grant provider and more like a strategic venture capitalist.
Right. And second, this shift is driven by a clear national imperative to establish and maintain U.S. leadership in quantum computing for both national security and economic competitiveness, seen as a direct response to global rivals.
Third, the $2 billion is a calculated bet on specific companies and technologies, aiming to build out a domestic quantum ecosystem and bridge the infamous valley of death between research and commercialization.
And finally, the true measure of success for this ambitious program won't just be scientific breakthroughs, but rather the creation of a self-sustaining U.S. quantum industry with viable commercial applications and robust private investment.
It's an incredibly ambitious vision. The big question for listeners to consider is, does this Uncle Sam as VC model truly de-risk emerging technologies and accelerate innovation, or does it risk distorting markets and picking winners too early?
And in the long run, will this strategy create genuinely resilient and competitive industries, or will it foster a new class of companies reliant on state patronage?
That's all for this episode of Tech Disruptions. Join us next time as we keep exploring the technologies reshaping our world. Thanks for listening. We'll see you next time.
Stay curious out there.